Friends, in this video for I Thought Wealth, I am going to talk to you on the topic margins and PE. We have seen PE ratios expand at a very fast rate in some industries. This has happened post-COVID. These industries were seen as defensive industries, and because we think that they are defensive industries where nothing can go wrong in the business, we trusted that the margins of the business would last. Even in cases where the margins had expanded in the recent periods, the assumption we made was that these margins would sustain. But over this 2-year period, the margins sustained for a brief while, and when they sustained, growth with high margins gave us even more confidence to re-rate these companies to levels of valuations which we have never seen before. So, where a company has very high margin, we justified a very high PE ratio. And what was the investment behavior that came out of that? We believed that you can buy at any price and the company would still live up to the valuation you pay. So, if you buy a stock at 80 or 100 PE, the company would continue to grow fast with the same margins, and that growth and high margin would combine to suddenly shrink the PE ratio through very rapid earnings expansion. So, the defensive stocks which we earlier used to trade at lower valuations had a merit to trade at higher valuations. This was the hypothesis of the buy at any price investing, and this happened in defensive parts of the market. By and large, these were defensive parts of the market. The glorious exception was financials, but we will leave that for another day. Today, we will only talk about the defensive parts of the market. So, in the defensive part of the market, it could be a pharma company or an IT company. We believe that the margins would sustain and that growth will be high, and as a result of that, we are not bothered about the PE ratio. The irony is, whenever you stop bothering about the PE ratio, you know you are going to pay more than you ought to at some point in time, but you still live with the comfort that somebody else will be willing to pay more than what you do, so you will be fine. People were fine for a good period of time, maybe a year. Then slowly things started to change. What happened? The growth estimates which we made started softening. That was the first change. So, when growth started softening, margins were still not softening too much. We still thought maybe growth will come back. So, you live in hope, you wait for things to turn for the better. And after a few quarters, what you saw is growth did not really go to where you wanted it to be, where you could justify the valuations you paid for, but slowly margins were giving you butterflies in your stomach. They start to look a little bit wobbly. The downtrend begins, and then suddenly after a few quarters you come to a place where growth is nowhere near what you wanted it to be and margins are also near nowhere. So, suddenly after a few quarters you realize that growth is nowhere near where you wanted it to be, and the margins are actually going to a place where you never thought they would be. So, the growth expectation is belied and the margin expectation is collapsing. That is where we are now. Even now, there are enough people who will take a high margin company which has lost its margins and think that the margins will go back to where they were earlier. Everyone has a right to do that. And they can also factor in the secondary expectation that growth will again go back to where they thought it would be and it never went. So, it is a double fantasy. So, what does this double fantasy help? It helps you justify even the current PE ratio, which itself has to be questioned given the facts that are staring at you in the face. So, it is always our right to have our fantasies, but some fantasies never become reality. And if this high PE trade in high margin companies which are losing margin and losing growth has to sustain or live up to its expectation, you need nothing short of a business miracle. I mean, something miraculous has to happen. Fantasy and miracle cannot be the bedrock of our investing. You need evidence. And when the evidence is changing, when the facts are changing, what are we trying to do? We are trying to put in a fantasy there so that we don't change our mind. It's up to investors to think what they want to do out of this situation. But one thing is certain, when we are too lenient in what we pay, then we will have to face the difficulty of adversity during the period of ownership. And we need to overcome that adversity by creating more actions, more investment decisions, more conviction and putting more capital on those ideas. The risk is, if you continue to be wrong, you are going to be in a very, very difficult spot. You are going to be in a place where the pain will be very, very high. It is also tempting for people to come and buy these falling knives saying that, oh, things will be all right. I am going to get back my margin and my growth and I am going to be in a great place and everything will be happy ever after. You can have those expectations too, but try and align your expectations and fantasies to the facts. See how the facts are changing and then decide whether you need to turn your opinion 180 degrees or just sit there and hope that time will turn the reality to support your opinion. That in essence is where most people who bought high PE stocks which had high margins and high growth expectations and are now changing very, very fast. These stocks need to be seen in the perspective of facts and the fantasies need to align with the facts. That's going to be the biggest challenge for every one of us and hopefully we deal with them in a more mature and sober way than we dealt with the actual fantasy as it evolved in the early days of our believing in this team. If you're still wondering what I'm talking about the pharma stocks where we tended to go overboard post-COVID. Now is the time for us to take a closer look and think for ourselves before we make more informed investment judgments. Thank you for watching this video.